Hello, everyone, and welcome to today's No FOMO Charts, Stocks, and Crypto TA live stream. It is Sunday, February 26th, 2023. It's just after 8 p.m. nighttime, Eastern Standard Time here in the USA. Let's go ahead and get started. Thank you so much for watching and following. I am streaming live on TradingView, YouTube, Twitch, and we also have a Discord group as well. Let's get right into it. This week, still, we're in earnings season right now. Earnings season continues in the USA. We have basically every other quote unquote large name company, but it's mostly retail, some technology, some energy, and some vehicle EV companies as well related. Let's go down the list for stock earnings volatility releases this week. We have Zoom Video, Target is the big one. If you're a meme stock trader, AMC Entertainment, we have AutoZone, Advanced Auto Parts, Blink Charging, just to name a few, HP, Norwegian Cruise Line, Rivian, Ross, Stores, Virgin Galactic, just to name a few here. There's a lot, so I'm not going to highlight all of them, but Plug Power is tradable, Best Buy, that's a big tech retailer, Dell, Costco, Kroger, Macy's, Nordstrom, Marvell, Hewlett Packard, Broadcom as well. So there's a lot. We'll just take a quick look at those during the stream. Next, for the USA economic data releases, we have durable goods, pending home sales, consumer confidence, manufacturing PMI, unemployment claims, FOMC member speech, and services PMI as well. To round off the news, yes, we do have earnings season is continuing. Global inflation and recession risk is still ongoing, so I'm expecting central banks around the world, especially USA, Europe as well, to raise the interest rate in March, just a couple weeks from now. In terms of the USA inflation data, our inflation data, the CPI, PPI, and PCE, all that inflation data was too high for last month. So inflation is still too high and increased. Therefore, the interest rate hikes will probably continue ongoing and will likely increase as well for at least a couple months. In certain states, especially Ohio, Nebraska, etc., there are ongoing environmental chemical disaster spills and the aftermath. There's a lot of just basic negative environmental related disasters. There's the train wreck, explosion, chemical spill into the groundwater and air. There are explosions at factories as well. So now it's getting very concerning in terms of what's actually going on with the environmental problems and these corporations. In terms of global politics, China, Taiwan, USA, Russia, political and military tensions, demonstrations are increasing this year, and the Russia-Ukraine war is still ongoing. That's escalating as well, just with NATO. That's why it's in the news. And in terms of cryptocurrency, after the G20 meetings this month, the Global Crypto Rules and Regulations paper is scheduled to be produced by the IMF and FSB by this September. So this is the first time we're seeing kind of global crypto rules and regulation actually being drafted. And this is off the heels of what happened this year and last year, especially FTX, crypto exchanges going bankrupt. So that's kind of what this rules and regulations reportedly is supposed to be about, protecting consumers and the industry, investors, even some speculators as well. All right, let's always be aware of the global news and how that affects what's going on. Hello. We have a comment here. Yes, just whatever way you see it, you know, an environmental disaster or environmental accident, that's just not good. That's what I'm saying. Wars are not good either. So regardless of the cause, it's when we look at it in terms of the stock market is right here. Is war good or bad? War is bad, so the market's going to crash. Is inflation good or bad? Inflation is bad, market's going to crash. That's why. On my stream, I look at the news, and most people look at the news and they have an opinion about it, and we talk about it. But for me, I'm a trader. I look at the news and then I think about, am I going long? Am I going short? Or am I going to hold? Or am I going to buy? Am I going to sell? What am I going to do? Right? So this is not a talking head channel. But the news is important. Some traders ignore all the news, or some investors, they ignore all the news, and I disagree with that. Right? If you trade stocks, if you invest in stocks, you'll very quickly learn that the market moves on news. If you're a crypto trader, that I understand that, because you might be thinking like, well, how does this environmental problem have to do with Bitcoin? It's like, there's a different story. So yes, if you're here to just talk about news, there's plenty of chat rooms for that, but this TA stream. So let's get into the T8. All right, Dow Jones, DIA. All right, when I look at this price, let's see what's going on here. We hit this resistance right here above like 343. That's a problem. We also have a support level here, 322. Now, the risk is if we lose this support right at like 324, okay, you can see the market, the bears will probably attack. Why is this happening right now? Because of inflation, because of all the negative things going around the world that we just kind of talked about, including COVID is still a little bit in there. But mainly it's all about inflation right now. Inflation, war, time escalation. That's not good for the economy or for stock market, right? If the inflation continues to rise for 3 to 6, 9 months, I'm expecting interest rates to go up, and then the price of the stock market will probably go down. Where we could actually measure this. 6% to the downside, 306 is the target. Some economists and analysts are saying we're going to 300, basically S&P 500, 3,000, S&P 500 to 3,000 level by the end of this year. That's a bearish call for some analysts and traders. Right now, though, on the DIA, we are testing this 200 EMA. If we go to the Dow Jones index itself, we actually lost the 200 EMA on Friday. We closed below that. You just want to watch out for that. It is still in a symmetrical triangle, and we are going sideways, 6%. 6% to the downside would take us about to 31,200. So we just want to watch out for that level. Now, if somebody's an intraday trader or looking for swing trading, it is getting a little bit oversold, but I would caution trying to play oversold in this type of condition. We need to see a strong level of support. You kind of want to see highlighted yellow. You want to see like this circle as well, right? You want to see this circle as well. You want to see the price support go sideways so we could get a bounce off of that news. Also, the RSI back in January 23rd or 19 was about, let's see what this was. It's about 20, 17 RSI. We are there, but the setup is not ready yet. So this might change within a week or two, etc. Okay, H4. H1, not ready to go yet. H4 is getting there, but it can still go more oversold. That's what my analysis is showing. Also on the weekly, you could clearly see the double top on this weekly, right? We almost got out of here because disinflation started in January, but it's the very beginning of the end of inflation, right? It could take 2 years to really come down those rates. So in the data, if I wouldn't be surprised, like I said, if we ultimately get an upside down head and shoulders, and then eventually in let's say 2024, we rebound to the upside, pending there's nothing that's gonna crash the world in a negative way. We could get this right upside down right shoulder right at 300 level. That's definitely possible. Just multiple scenarios to think about. All right, one moment, please. Okay. So thank you for, again, watching and following on my followers and supporters. Really appreciate it. So S&P 500 SPY here on the S&P 500. We're right at this higher low level, right? Hello, welcome. We're at higher high, higher low, higher high, higher low, right? 395. Higher high, higher low, higher high, higher low, 395. Right at the 200 EMA support level. So I know I have a lot of drawings here. I was doing some analysis last weekend. Actually, this weekend. But you can see right here, 393, right? 393, high, low. But it's right at this X marks the spot. That's why we might see an intraday bounce here, let's say at like 390, etc. Daily is not anywhere near oversold. That's why. The only thing is we're holding above this. We're trying to fight along this 200 EMA right here on the 396 level. On the weekly, right? Coming back down to support levels. So H4. Is it oversold? Getting there, but we could go lower as well. Negative 10 RSI. Not quite there yet. One second. Sometimes this happens with the charts where it gets collapsed. There we go. So just remember this picture. High, low, high, higher, low. If we can't get a higher high, which because of the economy right now, we might get a little baby lower high bounce and then retrace back down. So this level 392 is very important. Okay, let's go to QQQ. QQQ. Now, we want to watch for, we have this retracement here, right here. It is in the daily downtrend, right? Low, high. It might hit this lower low, and then we might give one bounce just for a little bit and see what happens. Okay. At this 200 EMA right here at 296, we just kind of lost that. So be careful because the market, when the big money shorts, ooh, right, you get this kind of action. Retail traders cannot prop up the whole market. There's not enough money, right? Unless every single one in the world, you know, does something like a Wall Street Bets type of thing, like AMC number 2. But for the most part, the index is not going to do that. So we are looking for support, kind of choppy trading, right? Gap down, almost morning star and gap down. As well. But at this H4 chart, in terms of, is it super oversold? It is not. H1, is it oversold? Getting there. We might see a little bounce happening in terms of futures, but there's not real, I don't really see a setup here for a bounce. It's just we have the down cross on the H1 and it is what it is according to my strategy. Let's move on here. Yes. See, this brings up a good point because for me, again, I'm a swing trader investor. I look at more long-term charts. So even if I see like a little bearish flag, I zoom out meaning yes, there's a bearish flag, like it could be here somewhere, like on the H1 or something, right? But if you're zoomed in, this is the problem with a lot of intraday traders, is if you're talking about this, we're zoomed in on 1 day's price action, basically, right? But if you zoom out, I'm looking at a couple months of data. That's the difference in the mindset between like an investor, swing trader, and a day trader. If you're a day trader, definitely there is something there. But is it my strategy in terms of high win rate? No, not this. All right, let's do a couple more, and then I'll get into the requests. I'll try to go faster here. This got distracted in the beginning there. All right, U.S. oil. We'll go sideways right here. There's a little bit of this head and shoulders, right, in the beginning of this setup, but it's holding support, and it didn't quite crash down, negative 12%. Negative 12% right here, which would take us down to 56.53. Not quite getting there yet. So want to watch out for the support at $65. It's just range bound right now between $65 and $70. I'll just leave it like that. All right, UNG. UNG, okay. So UNG, interesting. And the reason why, and this relates to that kind of bear flag setup, or even for me, I had an idea of a double bottom here in my profile, but that very quickly turned into a range bound. We almost had it, and then we had a supply problem, and then we had the drop. Rising wedge, double bottom to rising wedge, negative 10% drop. We hit that, and then we had the nice rebound. So these are the kind of plays that I like. I like this, right? This is neutral zone in RSI. I like this for that bounce. That to be there on this particular morning, but that's 20% volatility. Now, in terms of the big bounce, is this the start of the big bounce? Maybe, I hope so. On weekly, we're starting to get this bullish momentum divergence, matter of time. And this is what I'm talking about when I zoom out really far. We're looking at 3 years of data. This is the real support zone in this area, about 850. See if we get a bounce going on. But UNG, I don't push it too much because on people, is because the technicals do not always work. It's all about the actual fundamental supply and sales and the corporations and government as well. Just something to look at. So take a quick look at gold. Just call it the support level here at 168, right? Take a quick level at this 168. Is it oversold? It is, but the bullish divergence is not quite ready to go yet, not quite ready to pop. The 1 hour looks like it's ready to build some positive momentum here on the 15-minute as well. But it's right at this 15-minute EMA, so I'd be careful of that. The 1 hour, it might look like I want to attempt to drop one more time and then try to rebound, maybe like a UNG's type of setup. SLV gap down as well, getting to that oversold. But then in terms of a very large support formation forming, right? This is just one gap down on the price. Do we have this large upside down head and shoulders ready to go? No, not yet. So that's why be careful. This reminds me of May 2022 price action, right? You get a gap down, you might get a V-shaped reversal. That's intraday setup, but we're entering into the left side of the RSI, which is why I'm not completely excited about the setup yet on silver. It's there, it's building, it's very close. Very close, but I like to see a little bit more evidence in terms of the price action to really, really capture that high win rate scenario. All right, we have a couple requests. All right, we could do this one before we move on. Bear flag. This is on the 4 hour. You're talking about 4 hour SPY. This is not a bear flag right here. This is the price is not a bear flag. If anything, it's a like descending wedge little price pattern, but it's not a textbook bear flag. It's really not. So, but either way, it's under a support level. There's a trend line here, which is why I underlined it at 395. Let's put a big, let me put like an emoji here for next time. So let's see. Let's pick a random one. I'll put a star. giant star. Make it the brightest color possible for next time to see where that price goes, right? This is the cross of the double trend lines and see if that's going to be a large term support as well. Okay, let's do a couple tech stocks. Somebody's asking for Microsoft. We'll do some of the big FANG stocks as well. Again, I'm a swing trader, so I'm looking from a longer term lens in the market. Okay, Microsoft, if I had to call it, are we uptrending or downtrending? Still downtrending long term for 1 year. Still downtrending for 1 year. If we could draw a little bit of a dirty parallel channel, if this helps visualize the support and resistance, still in this downward trend. We attempted to pop out of the top here. And this is what I'm talking about last stream is when we have a lot of green in the market, we just had a nice dead cat bounce, nice little rally for about 30 days. And then once we have a lot of green, then people see that on their phones or on the watch list. And then it mentally seems like, oh, we're going up. But the short-term analysis is, well, if there's already a lot of green or I see this type of price action in the market, is there was a setup for my criteria a month ago or 2 months ago, meaning October. I played this in October and January as well. I buy low and sell high. So for me, is this circle relative high or relative low? It is a relative high in this short period of time. If we're talking about 3 to 6 months, this is a relative high, the circle. Right? Where's the relative low? Here in October 22, January 23. I played Tesla here, made 45% in this zone, and then I sold. Right? It went higher than that, but it's okay. I went on to other trades. So for the analysis, that in mind is there is that resistance on Microsoft at 271. We Fibonacci this, where could this thing fall back down to over time, not in 1 day, but it could fall back down to 242 or 234. If we pop open some EMAs, it's right above that EMA. That's why we're holding that support. The 200 EMA on the H4 is also there, not quite super oversold. That's why we're right now, a CNBC news article said I go away, is the market is diverging. Some people believe inflation is going to get better this year. Some people believe the opposite, right? So we're seeing that reflected in the market ever since that FOMC meeting right here. Is it quite oversold on the H1? We actually lost. We had a death cross on the H1. So I would be careful of this. Even we have a super low RSI, that's not the bottom. That's why for me, I've learned from experience is to just back off a little bit. I'm already short certain stocks. If you're wondering, like if you're trying to go long or short, educational, it's not financial advice. I'm already short. So that's why, right? It's just a difference in your style and the mindset and your strategy as well. If we draw the rising wedge like this, that is that relative top. So I'm combining a lot of like education here into the actual analysis. I'm going a lot more detailed than usual. Okay, Apple. Just to get Apple, remember last time on stream, I was saying, hey guys, we have this head and shoulders here on the RSI. That's bearish. We had the bearish breakdown and voila, we had this pullback here. We had this double top highlighted in blue, pulled back about 4%. If this double top measurable, that's why this blue box is here. The 50% EMA is at about 139 or 135 area, right? The H4 trying to hold that support above 144, but we've seen Apple crash down more on oversold. Keep in mind the oversold setup, it might not happen in like 3 days or 1 week. It could take 3 months for a real setup to occur. So let's say if this is a fake golden cross, here to here took 54 days, about 2 months. Now the rally, it took about 42 days, so about a month and a half. So in terms of where we going here, if it's pulling back could take 25 days, another month until March. I could see that happening as well with little intraday bounces on the way like that. Okay, let's quickly, let me bring up my list here. It's going to get bright. All right, let's look at some of these earnings just so we get an idea of what's going on. TGT, Target, a very large retail store here in America, competitor to Walmart. You could buy pretty much most household items that you need at Target here in the USA. And where are we with the price? Let's just get support resistance. Obviously, a resistance here on the top side, below 180. Below 180. Below 180, right? That's something you want to watch out for. You can see if they have bad earnings, the support right here at 140, 180 to 140. You want to watch out for that. Now, where's the large resistance? If we happen to have a nice earnings, we could gap up here to $200. So just something to think about for Target. But I'm not recommending any financial advice. We just get the support and resistance. Long-term support and resistance, we'll get this pandemic low to pandemic high. And see that it bounced around the 618, hit the 50% retrace. So there's obviously targets here on the Fibonacci. All right, let's go to the next one. AMC Entertainment. You know, I'm not the biggest proponent and supporter of meme stock trades, but for example, I actually did trade and invest in AMC. I bought AMC here in the beginning. It was like I think it was a $2 something and then $6 for the second one. So I played these two breakouts, but that was 2 years ago, meme stock mania. If you look now, it's retrace, it's in a downtrend. So all of that nostalgia and that effect is gone now. I'm already out of AMC a long time ago, like 2 years ago. But in terms of the shorts, they have a firm grip on this one. Firm grip. They are in control. We draw a trend line here as well. Or we could draw a parallel channel just for a quick reference. And we can see also still downtrending with the market. You can clearly see the two targets now, the resistance above at 1077, support down here at the $3 range. We want to see where that goes. Let's just skip around here. Jump down to Best Buy. Best Buy, big, I shouldn't say long, it's a large technology electronics store, retail box store here in America. Best Buy. Although Amazon is one of its biggest competitors, you could pretty much everything you buy at Best Buy, you could almost buy at Amazon.com online. But in terms of where are we? This looks like the Dow Jones or NASDAQ. It's like a clone of the chart. We have the resistance. We have the support. This one's actually pretty tight in terms of the high-low, right? This bottom support trend line is actually fairly tight in this ascending wedge, ascending type of pattern. But if I draw this sideways rectangle pattern, okay, now we might be in a little bit of trouble here, plus or minus 10% volatility, and if it happens to pop, either way. Now, let's just keep going down here. I remember one of my old members asked me about Costco. I still look at Costco from time to time, but very volatile stock in terms of range bound, like choppy. Not the most volatile for day trading, but for investing, this is like what you do not want to see as an investor when it just does this. You want to see uptrend, obviously, when you're an investor. Unfortunately, you know, because of the pandemic slowdown and supply chain and demand slowing down. Also, we're in a period of high inflation, interest rates going up, people's savings dwindling down for the past year. Savings rate only approximately somewhere around 3.4% right now, down from 7% average. Are people going to buy at Costco, right? Are there cheaper alternatives than Costco? There actually are. So it's just something to think about. Someone's going to play this earnings. Might keep my eye on this one though. In terms of the support, right here, I have a 459. If it breaks out above like 15%, we want to watch out for that. That'd take us to all-time highs. Okay, let's do a couple more and then we'll move on out of here. Macy's. Some people forget about Macy's. You know, not the most popular store ever, but clothing retail store. But it's still alive in terms of the store, right? Riding that trend line. So for Macy's, just drawing like two lines, I understand that if we lose the support right here at 1930, Macy's might be in big trouble in terms of if this is our weekly low, if this is our weekly lower high, there could be a lower low in store for some of these stocks. So we have to watch out for this low. I'm really looking for this $15 range to hold or not. Stuck between this $25 range. Not the greatest looking setup in the world. Look at a Nordstrom, JWN, even more volatile. And the trading volume on this one is not even that much. You know, it's like 4 million volume on the trading view volume indicator. Still in that downtrend. We got a reverse Fibonacci for this one. Trying to hold. We popped up to the 618. Very nice, but very short-lived. Okay. So in terms of what's going on with some of these earnings, these are some of the bigger names you're going to see with the support here at $13 and $23. It's going to pop off in either direction for CNBC or Bloomberg earnings as well. Okay, if you have any requests, why don't you go ahead and type it right now? I'm going to switch things up, the pacing up. So if you have a request, please let me know in the live chat on all 3 platforms, and I'll do some requests instead of going straight into crypto today. Let's do LMT, we have request. Hello, thank you for watching, subscribing, and requesting. I look at all stocks. Anything I can look at TradingView, I can analyze on the charts. Okay, so Lockheed Martin. Just take a quick look. There's EPS, revenue surprise. Okay, it's pretty good. Almost the basic top line numbers. Now, this one, because it's an older company, right? This is what we want to see in terms of investing. The problem is it's basically almost at all-time highs right now. That's kind of the issue with these, like, you know, the big names in this parallel channel. So in terms of, I'm looking at a monthly chart right now. In terms of 8 years, 7-8 years, it's been in this upward channel on the weekly chart. So now that we have that perspective in line, the resistance is $500. If we don't break $500, it could actually just keep riding this middle heart line here in the middle, high, low. If it can make a higher high, great. But if it cannot, and it gets stuck here temporarily just because the market's going to come down, maybe it might hit somewhere like a 434 area. The Fibonacci will take the pandemic low to the pandemic high, and we can easily see here, add another trend line on top, and we box in the price. Now we get box things in quite significantly. Little choppy. Surprisingly, this stock has held up well in the pandemic. It's not a true oversold setup right now. The RSI on the daily is about 60. The 4 hours fading in terms of the RSI. The momentum's a little bit down. We might see a little pop up on one of the lower time frames, but it's not extreme oversold. If somebody's trying to long this, I would have to, if I was trying to long this, I would have to wait for a very strong support level. So even if this RSI or this RSI in the price was low, it didn't really bounce until we hit this 236 support level, which the technical analysis showed. It hit it perfectly. We had that lower RSI, momentum building, then we had the pop up, and the whole market went up. So, in my opinion, unless LMT has some kind of amazing outlook, like corporate guidance, or their earnings are amazing, products and services, and what they're doing with other corporations, it is still in the uptrend, but it's kind of fading a little bit. It's hesitating. So we do see, if we just back up and just kind of turn off everything, is the correlations. So in pandemic, we crashed. In 2021, kind of choppy and went up when the rest of the market was going way up in Dow Jones. 2022, defense stocks were up, fading, rally. So we can't have another fade. If we think of it that way, is if the price really does not break above $500 and hold, you can kind of see it ready to fade down a little bit. So it's really dependent on the news as well, but that's what I'm seeing on the charts. So this is not financial advice, just educational and technical analysis or requests. Let's check the request before I move on. Okay, looks like people want the crypto. Let's go straight to crypto. Thank you so much for watching and following. I am streaming live on TradingView, YouTube, Twitch, and Discord. If you like this stream, if you learned something, if you want to support the stream and join the community of competent analysts and traders, go ahead and would appreciate clicking that follow button or subscribe. If you want to have a request, just let me know in the live chat before we end today. Total crypto market cap. All right. Now, I want to be clear about what I said last time. Maybe it wasn't as clear in last stream, is when I was saying the stock market was going to pull back. That happened. I wasn't as clear in crypto saying watch out for the pullback. So I want to make myself like extra clear, is that we have a resistance here at 1.1 trillion on the crypto market cap. And we see that inflation fear is having an effect on crypto itself, right? We're right at this resistance. Let me erase this so you can see. If we do not clear that resistance, this could be a short-term top. I hope that makes sense for people. We just broke out of it. If you want to be extremely accurate, we just barely broke out of it. But if the crypto market, you can see, if we pull back on crypto market, then we can crash back down. Especially 6 months from now, when we have the IMF, the FSB crypto rules and regulations, that could shake up the industry. That's only 6 months away. So if the price action starts crashing, and then we have that crypto rules and regulations that's going to regulate exchanges, etc., could crash back down. Where's our support? Our support, big support, 740 billion right here. 740 billion. Let's see, 2020 low. Let's Fibonacci. By the way, if you can't tell, I love the Fibonacci tool. Makes life easier for technical analysis if used properly. All right, excuse me. And we hit this resistance here at 1.1 trillion, right? Now it's almost range bound. Somebody could say, wait a second, isn't there this descending triangle or descending wedge? Yes, we hit that and we rebounded out of that, but it's rebounding into a resistance point right now. So again, just to make myself clear, if we do not, in the crypto market, break out, retest, and hold above this 1.8 trillion, 1.08, the market could pull back down. It is possible. On the weekly, zoom in. What do we see? We see an inside bar here on the this red candle, inside bar, and the week is starting right now. So if this turns out to be evening star pattern, if it does that, that's not good this week. On the 4 hour as well, it did have a nice little oversold setup, so we might get a small intraday, little small day trading bounce going on here. But this does look like a little head and shoulders, so I'm gonna watch out for that. Fighting at the neckline right now. The H1. already had a nice little bounce. So again, the oversold setup was yesterday, and there's about 3% volatility as well. So if I don't see my setup, I'm not going to point anything out on the charts. I'm just going to say it's in progress. All right, let's go to Bitcoin. Bitcoin USD. Let me bring up a fresh chart here. Let me just use Kraken today. All right. So Bitcoin, you might say, well, isn't it the same thing? It's a little bit different here on the charts. We'll start with the weekly here on Bitcoin. This part looks similar. Inside bar on this candle for last week could turn into a double top. So the resistance, especially candle body wick, we just hit that 25.3K. We went sideways here. If we hit that double top, it might pull back down. On the daily, we can see this lower trend line. I visually see it. All right, this is what Bitcoin is trying to do here. The visual as well. That's what traders are probably playing right here. I don't day trade crypto anymore. I used to. I switched over to stocks and swing trading crypto. This is what people are playing. The high, low, high, low. HL, just like I think about in my mind. Can we bounce? So in this way, the market is correlated with QQQ. The market is correlated with QQQ. We saw this. QQQ, SPY, Dow Jones. We pull back for like 5 days and we're trying to test that. The S&P 500, that X marks the spot area. So there's that definite correlation. It's all based on the inflation news. In terms of a short-term Fibonacci for about 6 months, as soon as we lose $23,000 Bitcoin, if this doesn't bounce, it might bounce. But if we lose it, I'm looking for downside. I want to see the market go all the way down to 20K Bitcoin or lower. Let's get some additional value. Unfortunately for the investors, it's going to be a lot of pain. But if somebody's a trader, right? And here's the educational tidbit, little knowledge right here. If we look at from November to March on this price action, let me just turn everything off. If I look at this price action here, where's the relative lows and where's the relative highs? That's how I think about it. Relative lows and relative highs, support and resistance. That's why I do it every stream, because it actually works. Support and resistance, lows and the highs, trend lines. Is it going up? Is it going down? So instead of putting on 50 indicators, that's unnecessary. You just track the price and then get some assistance from the indicators. Right? So right here, where are we going? Is this, let me write it. Let's see, point C versus point B versus point A. I like to quiz myself like this, right? Do I want to, let's pretend somebody's trying to go long Bitcoin with a, let's just say a 5% stop loss with a 10%. That looks kind of weird on screen, but it's actually, this is 2-to-1 play, basically. Let's do 5%. Where would you buy? Would you buy, when you're trying to long, you're trying to make a decision, where are you going to put this long box? You're going to buy at A? Would you buy at A? Would you buy at B? Or would you buy at C? That's a decision. You have to sit back and think about it. As a swing trader, as an investor, is given the current price, given all the current data, given all the knowledge and information and your skills and your account, educational advice here, where would you buy? Point A, point B, or point C for a swing trade? Long. For me, my style is B. Answer is most definitely B. And if you're wondering like why, how? Well, if I'm looking specifically at these 3 points in time, this might have made it easier to see. But why would we not buy at point A? It's already too high, the bounce. In terms of if I just pull up indicators and I'm looking at a very small segment of price, that's not my setup. It's too high. The price is too high. The indicators are too high. We have a double top resistance on the wicks right here at 25,000, that thing. And then once we lost 23K, game over. Game over. That's a bad setup for a long. No, thank you. I'm going to pass on that. Now, we had a false breakout here in September, October. Unfortunate, but predictable because it rejected off the EMA. Almost had it. Almost had it. And then finally, when we went to B, section B here is, wait a second, the price is actually looking like it's going to go up this time for real. Why? We had this double bottom here. We also have a breakout. And then we had the real breakout, the short squeeze. This is the real short squeeze, but right at 17K, right? This is going down, crash. Almost went up, had the higher low. Oh, beautiful. Right here, boom, bye, bye, bye. Was it really scary there in terms of nobody knows what's going on? Yes, there's all of those feelings, right? But as a trader, you see a setup, you just buy. In terms of your strategy. And what was that? That paid off like 3-to-1 almost. 4-to-1 at the top. That's why some people took their profit. You make 4-to-1 on a 2-to-1 trade, just sell some as a trader. And then to close it off, why do I not want to buy at C? Because it already went up 40% in the short term. So there might be a small little pullback. It's not going to crash down to nothing. But is it my setup? It is not my setup. My setup is the price is not low enough. This is not telling me anything to buy, right? The EMAs might be telling me a little bit here in that we might crash back down to 22,000 and stop there first, maybe 20,000. But that's just a little insight in terms of, I would say like intermediate. It's not quite advanced, like super advanced technical analysis, but it is technical analysis, right? Now, the problem with only looking at this point in time is it's not enough data. It's only 3 or 6 months, right? If somebody wants to really analyze for an investment, you got to zoom out. You got to zoom out. I mean, look at everything, right? Look at everything. Now, if we zoom out this way, I'm on a log chart, by the way. We zoom out this way. I like to put it on line. This is not the right one, but okay, we could leave this one here. I'll just leave that one there. So now we boxed it in. We boxed it in. This is what is this? 9 years of data. This is 9 years, right? Where's this $16,000? $16,000, people don't realize that was basically like the high zone of the Christmas, December 2017 rally here at like 18K, right? That's why we're hesitating. So long-term Bitcoin, right? If inflation doesn't get better, I'm anticipating this thing to just kind of go down. Now, the other problem is if there's another trend line here, this is why we're having a problem. This yellow trend line. In the long term, we're stuck under it. Let me highlight it in blue. We are literally stuck under this 25K, this line right here. See that? That's why. In the very, very short term, for like the 2 years, past 2 years only, we just broke out. But you can see it's literally sandwiched. Price literally sandwiched between 25K and 21,000. So those are the two numbers. Let me leave another star here for next time, because this is why I like looking at charts. You get a long-term perspective of what is going on with Bitcoin. That's a bug. Okay, we'll just leave that star for next time. So hopefully people understand what's going on with Bitcoin right now. It's the fight for inflation. What I learned over the past couple of years, especially with pandemic, is Bad news, if it's really bad, not just news, but events. What are some of them? We just listed off. Everybody pretty much knows by now. COVID first, then Russia-Ukraine war, then inflation, then corporate layoffs and earnings problems, etc. And now we have, like military tensions and environmental problems and weather problems, etc. And we're all trying to go back to normal life, right? But is this the time? Is this the period in time right now, today, or this week, where people have money and they're going to go deposit that money into the bank and transfer it and then into their crypto account and buy Bitcoin tomorrow or next week? It doesn't seem like it's the right, exact, perfect environment for everybody to do that, to get the moon rally, I'm going to call it. But it might be setting up something I'm watching. We are certainly in the zone. It's the yearly support zone of $15,000 bounce. It's going to take some time for this thing to, if it's going to go up, it's going to take some time. If we're going to crash down, it might happen a little bit faster. Okay, so that's my very, very long explanation about what's going on with Bitcoin. So everybody knows now what's going on. Ethereum USD. Let's go to the next one. So now it's really important. Why do I spend all my time on Bitcoin? Because if now that I have the analysis on Bitcoin on lock, I know that, then everything else falls into place. So Ethereum USD. Now in the short term, there's a little sim triangle here on Ethereum. But since Ethereum is basically the number 2 biggest crypto, I like to also use the weekly on Ethereum. And see, right there, it's right literally there on that support trend line for 6 years trend line. This is the battleground zone for the price. Ethereum trying to crawl and stay above the support line for all its life, dependent on it. So then the support becomes very, I know it sounds like I'm joking, but it's actually pretty serious, because if it breaks down out of here, that is not good. People are not going to be happy about that. But if it's low, we're trying to hit that lower high right now, if we can get it. So I'm going to call it, in terms of resistance, $2,000, and support at somewhere around $1,100. We'll just watch out for that. What is that volatility range? It's very large. 70%. 70%. Let's just pretend. If we lost 70% on the support, where's it going down to? 331. As a trader, I would like to buy Ethereum down there. If it ever gets down there, I'll probably buy some. Very similar. So something to watch out for. If we don't have constant support price structures, meaning we should never go below $1,100 or $1,000. We never want that to happen this year. If it does, then we're in big trouble. For the cryptocurrency prices. Okay, Binance coin. Next one for Binance. Now on the weekly as well, I take this low, connect it. The thing with Binance is sometimes this trend line, it gets a little bit dirty. It's been pierced to the downside a couple of times, but I'll just leave it like that. So Binance coin is consolidating sideways, and it's getting close to its support level, somewhere around like a 220 area. The mega support, which most people, I never hear anybody talking about this, is if it crashes the trend line, maybe about like a 160. So 220 is obvious, but the 160 area, that's a little bit less obvious. And if you Fibonacci the whole way, you can see we bounced on that 618 between the 50%, going sideways right at the resistance level. So there's a triple top here at 350 on Binance coin. See if we could get it pulled back down to 258. Right here's that star. I'm a star right here. I like this tool right there. That's the support, right? 240. I'll watch out for that. If we have a mega crash, let's just think about it for a second. If we have a mega crash on crypto, it isn't a descending triangle pattern. This is a flag. If anybody's wondering, like a very, very huge, it's not a pure flag, but it's when you can actually draw a triangle, then it kind of turns into a flag or pennant. Flag, usually by textbook definition, kind of looks like this. That was like a flag type of large formation. A pennant, it's more like a triangle. So this is not really a perfect example of that, but you get what I mean, right? Excuse the background noise, but still consolidating. Now, somebody, if they're ultra bullish, would say, wait a second, isn't this a continuation flag? It could be. That's why it's right here at that purple support level. Binance Coin. Binance, the crypto exchange, the industry needs to do something in terms of, I mean, they're doing a lot, but in terms of customer retention, right? Because even with Coinbase's earnings, I think it was like last week, is that not everybody is, they made some like sales and revenue, if I remember the earnings report correctly, don't quote me on this, but in terms of the customer retention and the numbers is declined. So how to get the crypto traders back is reduce the fees. That's that's how everyone went back to stocks here in America. Make it zero fees, trading fees. All right. So Solana, I saw some bearish news on this. Want to watch out for Solana as well. Is we have a trend line very similar to Bitcoin and Ethereum in terms of the general structure. We are not in Moontown uptrend rally. No. We are in a downtrend right now. So the problem is, even though this bounced up like 100+% in this past move, almost 200%, we're still at right at the resistance roof of $27, $28. If that doesn't break out, I'm imagining easy for this thing to get shorted down. It just takes a little bit of time for people who are hesitating. If they're hodling and holding up here, and then if they don't have stop loss, it's dangerous, right? Because if this thing crashes back down, we could go all the way back down to $9. If Fibonacci up to get a better view of this, we're below that 0.88. It's already at a discount. Right now, it is 90% off. It was 96% off. That was a lot better. But just something to watch out for if that turns into a double top. This is an intraday flagging pattern. Let's see if we can find it. If we could zoom in. Excuse me. It's a weekly flagging pattern, right? This type. A little bit of a triangle type of thing. So just kind of watch out for that. So again, when crypto runs on only hype, when it's only hype, I get cautious. When there's real fundamental change, that's when I get interested. But that usually requires some government or corporate changes. Okay, I think I'll do one more crypto. I just saw this stock request right here. So let me do, again, if you have crypto requests, just let me know. Like anything I can look at TradingView, just let me know the request and we'll talk about it for a little bit. Let me do rapid fire. Let's do a couple rapid fire round crypto. Cardano hitting this resistance below 42 cents. Resistance, the support's at 35 cents. Watch out for that breakdown. Hopefully it's not a lower high, right? You could get these nice bounces, but if it doesn't hold, you crash back down. If this doesn't hold, you crash back down. Possible. XRP consolidating to the side, but that support level between 36 cents and 33 cents needs to hold. There is a little bit, it's a sim triangle, but almost like gold, there is some kind of head and shoulders type of pattern. You want to watch out for that. AVAX double top. If that breaks down below $18, could pull back significantly. DOT This is interesting. Dot looks slightly different in the fact that we rallied, but this box here, this might happen. The copy paste of this box. So even if we pull back, it could pull back all the way down to 2023 or December 22 lows. But if that holds, that's okay. In terms of long term, I would rather, instead of having a moon rally that fizzles out in 3 days, it's let's get some real support test. And if we get a huge double bottom, then we're going off to the moon. But if it pulls back, that's normal. Dogecoin, request from last time, support level about 8 cents. Here, if you lose that, it's fading very slowly. Shiba Inu, okay, in terms of here, it did break out of this wedge. Now, the educational example here, 52% still profit range. So the management of this one is up to a trader's decision. Would they sell all? Would they sell half, 25%, 10%? Sell principal, reduce exposure. It's really up to a trader's discretion, their strategy. Matic as well, right? Just as an example, entry profit target 1 would sell that profit target. That's what people are doing. Profit target 1 sell. Profit target 2 might not get hit. So definitely want to, if somebody took this as an example, is I would move my stop loss up to my entry or a little bit higher if it's just a swing trade to make sure even if the market crashes down, I'm getting stopped out into profit and not loss. Atom USDT, this long-term support level, 1150 here, near. Here's an example of why, remember that ABC example? This is like buying at the C area. This is buying at C area, it's too high. So that's why I got stopped out in the educational example. It's too high, right? This is the B example or A example down here, support level, right there. Bye. Here, all right. Litecoin again. Litecoin was nice. We just want to watch out for Litecoin. I know the happenings in 6 months, about 6 months, but just want to make sure it doesn't pull back right at the $100 level area. Let's watch out for that. Just rapid fire. All of these, you can see they're at some kind of resistance pullback point, just going extremely fast. There's less support on the daily. GRT, this is a good setup, except it was very small, volatile coin. I don't really push that on people. All right, let's do let's go back to a request here, EL. Okay, ST Louder. Company, makeup company here, actually a global brand. We're back to stocks now. Stocks land. Okay, so potential long entry educational example from Casey on TradingView. Thank you for this request. Long entry at 240. Stop loss 257.08. Target price of 214. Wait. I think something got messed up. I think your stop loss maybe got flipped or something. Let me try to flip these numbers. I don't know. I think your stop loss got flipped. I'll just open it anyways. All right, so let's just pretend this kind of sounds like your stop loss maybe. If it's this kind of play, just the psychology of it is, the problem is once it starts pulling back down, the question is this the bottom, yes or no? And there might be some volatility correlation here with, we saw those other companies that's being released this week. Example, Macy's, Nordstrom, some clothing like Urban Outfitters. I think there might be another clothing retailer like Ross as well. We had TJ Maxx previously. So it's a little bit related in that field. But in terms of If I circle this low and I look at the RSI, it's not quite ready for the setup yet. We might get like a little baby bounce. It almost looks carbon copy of August 22. So these two levels in the box and this one. So we can see, right? It might get one little pop-up bounce and then pull back down if the market starts crashing. So it's just something to think about. Pullbacks are tricky. Pullbacks are tricky because yes, we get intraday volatility of things bouncing around up and down all the time. But the fact that that lost its rising wedge pattern and it's starting to fall out, we lost the 200 EMA. It's going to track probably, this looking like it's tracking the Dow Jones. If somebody's trying to get in a swing trade, okay, so that was my investor mindset. Now I'm looking inside intraday as a swing trader. On the H4 for a swing trade, it is starting to set up in terms of potential bullish divergence and bullish momentum. If it does bounce, probably going up at 250, but is it going to rebound like that? Well, the whole market has to turn around for that to happen. So the fact is sometimes we get these waves. We get these waves of uptrending wave, and this should have held. If inflation really came down, let's pretend CPI, PPI, PCE data all was negative, meaning the inflation came down for last month, this probably would have held and we probably would have bounced here in all stocks. But that's not the case. So people are already getting bearish. So I just watch out for the long-term bearish play if it happens. This long play, it might work, but the fact is, I believe just for my ST Louder EL doesn't have that much volume too, so you want to watch out as well. Let me check one thing. 230 million shares float. Volume about 1.1 million here on the trading view. Let me check a different system. Yep, so 1.1 to 1.63 million. So it's a very like low traded stock in terms of volume. It has volatility, but just watch out for that. Can move about $7, which is about plus or minus 3%. So the stop loss of 10% is safe, but in terms of the volatility range. However, sometimes though, if the market's really bad, this thing could just continue to sell off. So I'm just giving just caution. Last time we hit that RSI in this setup from here to here in the pink, that was not the technical bottom. So that's why if it happens again, we might get something like that or even here. Just in case that happens, right? I'm lining up multiple indicators and the price is downtrending. We haven't death crossed yet, so that's why it's not totally devastating on the price, but just want to watch out for that. I do want to point out before we end, support level 237, support level 225, 213 as well, right? And resistance 247, 256, 267 as well. If these are too many lines and it looks confusing, I would recommend just maybe put up a Fibonacci, and then it becomes a little more clear of some of those support and resistance. I love Fibonacci. Oh, you're short. Okay. All right. Well, let's just look at it for a second. I was like, those numbers seem flipped. All right. So even if this is, let's pretend this is the short down here. Just somewhere like that. The risk is still kind of similar in terms of what you have to watch out for as a short is on this 5-minute 15, we might see a little bit of a bounce at 9:30 a.m. tomorrow, that first hour of trading, because on the low side here, right? That's what I'm saying. On the long side, we might get that one bounce. But then in that longer term, once we have the bounce, the RSI should go up, but that longer term picture, it might short down 3 months from now or something like that. That's why it really depends on someone's time frame. Sometimes going short, the timing does matter. So hopefully that still made sense for you. Okay. I do appreciate the requests and for the follows and watch that everyone's providing right now. I think I'm gonna switch the stream up instead of just doing real charts. Like maybe we'll do some bar replay for fun for maybe about 20 minutes. So if you have if you have to go, if you have to log off, feel free. But I'm gonna try to do some bar replay for education because I think just talking about charts, that's not the full, education or training or knowledge. Is bar replay does help to how do we connect the analysis for charts with trading and make it work better. So let's go to, I know people like crypto, so we'll do a Bitcoin. Let's pick something like random, like a Gemini chart. All right, so now we're moving into the final segment of the stream, just for a little bit, is now we have the bar replay tools. So these are two practice tools that I love and that I recommend to every single trader and analyst, or whatever you want to call yourself, here on TradingView, is we have two tools. We have the bar replay tool with these two rewind buttons. Bar replay, I would suggest start on a daily and you just kind of rewind for your practice. Okay. Let's just close your eyes, pick a random spot. Okay. Now we look at the charts. This is the old data here where Bitcoin was, this is December 2021. And there's a bunch of blank space on the right side. Now, hopefully we don't remember visually what's going on. Then down here, you have the play, fast forward buttons. And now you could buy and sell one coin for practice. Okay. So let's just pretend somebody went long here and then see what happens, right? Like somebody buys. Let's just pretend somebody buys. Let me check the DOM order. Does it show up here? Let me see. Where's the button? Order panel. No, it doesn't. All right. So let's just play. It did buy one. So if somebody just randomly went long there, what happens? There's a fake out bounce, crash. If they had a stop loss, I should have put this up first, but if somebody had a stop loss, what was that? The stop loss should have only been like maybe 6-7%. Got to stop that on that trade, right? That's why random trading that's not a strategy. No good, no good. So we flatten, just cancel that. Right now, next is if it's going in this downtrend, right? What if somebody randomly shorted here? Just random. It's already down too much, but let's just pretend the theory. I do see a head and shoulders right here, right? And I don't actually remember the exact price action. Only hard part about this, that's the good part about it is try to forget the price action, right? Because in reality, we know it just basically goes down. But in terms of the setup right here, there's a little bit of a head and shoulders. Let's see. Let's actually try to swing trade this coin. Let's say we have a negative 20% stop loss and a 10%, negative 20% profit target, negative 10% stop loss. I'm going to sell one. Go. Might bounce up on me. At the short-term bounce. Market is trying to rally. Ooh, that was a close one. That was a close one. See, sometimes that happens in trading. Very close. We almost got stopped out. I don't know if you can see that. Almost got stopped out within like, wow. Within 1%. Sometimes it happens, right? But if this is me, I would commit to that trade and you don't worry about it, right? I'm thinking about my entry. I'm thinking about my profit targets. Or excuse me, we should talk about entry, stop loss first, risk to reward, position sizing, profit target 1, profit target 2. So now I am letting it move around. That's, as a swing trader, that's a skill you have to develop. Is I would personally get in earlier. Like if I was shorting Bitcoin on futures or something like that, I would probably short it like here or short the breakdown here. But for this example, I just picked a random spot. There's that neckline. So it's fighting there. Head, shoulders, right side. This neckline was tilted. And so that's why it's tested like that. So the analysis actually makes sense. Let's continue. We're in profit, but don't get too excited. Almost got stopped out again. My goodness, what a wild ride, right? That's crypto. Now we hit the first profit target. So if it bounces around like that, I probably would have sold here in that first profit target. But let's pretend to see if it hits the target all the way at the bottom. Market's rallying. There we go, right? So sometimes it doesn't hit the second profit target. So it was a good idea to sell some or all at this first profit target. If this was a real trade and it started doing that, and I see this higher low here, right? This first one got pretty close. So I might have been tempted to just sell right at this candle body wick if that happened on a particular day. But since this is higher low, okay, then you got to get out. The stop loss, I'm not leaving it up here. Once it comes down here, I'd probably wake up, see that happening, move it down into profit, and then I would have stopped out here in profit, right? So that's the trade management part. So that's why swing trading, it depends. If somebody's swing trading and we're buying at like a random spot, the trade management becomes much, much harder. So if I flatten this, where would have wanted to short this thing? Here. And if I open my indicators, it would also show me the exact day right here on November 8th, because that's my setup. It's losing momentum, bears divergence, boom, boom, down, down. Short the break, support level broken down. Then I would open the short here, right here at 60,000. Short that thing down. Then we would have hit 40%, right? So that's why I'm trying to have the no FOMO mindset and try to really have efficient buying and selling instead of doing random. So the TA helps me reduce the randomness, but I still need to be active with my charts to get a good entry on the trade. All right. So let's just fast forward now. Just pretend, you don't remember what's going on this right side. Let's keep going here. Just watching the charts. I'm going to switch it to a line so it's easier to see. All right, this thing's starting to crash down on me. All right, so we just about to lose this trend line. So this could be another setup. It would have been nicer to short down here on the example, right? But let's pretend we're doing a breakdown here. If this thing is going to break down on me, 7%, let's do a 2-to-1 like this. Sell, go, practice. Floating around, almost got stopped out. Boom, nice profit on that trade, right? So this one, when you have a real setup, you see how that makes more sense instead of just kind of buying randomly and like there is no crossing my fingers strategy. Hope is not a strategy. Emotion is not a strategy either. So having a real setup. So let's pretend, okay, we made money on that trade. Great, close that, next. Now, once it crashes like that, it's already at some low oversold. So somebody could try to play a oversold setup bounce buy. Let me put this, before I do that, let me put this on. Let me only put a conservative 10%. This one might get stopped out because once it enters into that zone, it still might crash additional. Let's watch. See the crash? Almost got stopped out here. If the candle body wick pierced it. Let's be realistic. Oh, it's very close. Yeah, we would have got stopped out on that one, right? So sometimes that's why buying. Where did I exactly randomly buy on this one? Right here at the 31K. That's not a low, right? If it's flagging like that, the low would have been here. Going long at 28 would have been better, right? So just fine tuning those entries. That's why the practice tool really helps. Is experiment with it, right? It's going now. So what do I see? Okay, it's flagging to the side, a rectangular pattern. So if I lose that support, maybe I might want to short this thing down. If it bounces, maybe I'll go long. It's going short, right? So I would have definitely shorted that. If this was a real trade, if the market was open, I would have shorted right here, right? Hope that makes sense. If it bounced, I would have longed. I would have done this. Long, initiate, stop loss, go. Catch that thing, right? If it's short, we lose the support, reverse, stop loss above here of the previous candle body, and then this was a huge trade, 20% to the downside. Beautiful, right? So these are things to practice. And honestly, I would recommend I just do this randomly for my spare time. right? I mean, when I first started, I did this manually in terms of there was no bar replay. So I would just bar replay and then I would analyze it and talk it out like a sports announcer myself, saying Bitcoin's doing this. Um, Another way to think about it is a good way to test your candle skills. If you don't want to practice trading, you don't have to. You could just rewind the tape. Because when I was younger, I used to be an athlete as well, right? So, um, or when I was doing my other hobbies, sometimes I would like record myself and just watch myself as like to improve, to coach myself. That's what my mentors, my coaches taught me is just record yourself. We have the technology now. So with the technology of trading, like 50 years ago, this is impossible, right? But with TradingView, you just rewind it. Just rewind it. So let's do it again. But now we look at, let's pick a random spot. Let's try here with the hard part when it's going, actually, let's even rewind. I remember there's a person on my stream 2 years ago, we were talking about Bitcoin right here, right at $10,000 level. I think it was literally right here. And then we were asking what's going to happen with Bitcoin. And so $10,000 resistance, once we broke out of that, we went to the moon. But on bar replay, it's like, let's go back before pandemic. Let's just call it out. I might have to zoom in a lot. Okay. Let me see. Can I change the speed? All right. I might do it at this slow speed. Let me zoom in. So we hit the support level above 65. So now we're in December 2019 price data. And it's a daily chart. We're just going to do candle analysis, right? All right. So yes, somebody could do case by case example. We had this little upside down head and shoulders right here on this price formation. Consolidating breakout above that neckline breakout. Is it going to uptrend? Yes or no? That's what I'm thinking. We had this low here, January 2020. Wait a second. It's starting to come back down. Attempted rally, making a higher low. This head and shoulders, 16%. That's already done for the first target. Second target would be about $10,000 Bitcoin. See if we get there. It's uptrending. Boom, we hit that. Consolidating, shooting star, doji candle, bearish engulfing candle, doji, hammer, bearish engulfing, doji, bullish engulfing, bearish, bearish engulfing, three black crows, doji, consolidating, attempted lower high bounce on the price. We're trying. Let me stop it right here. So you can see that, right? We went from the upside down head and shoulders. This was a bullish play. I remember I actually played this. So right here, upside down head and shoulders. That's bullish. Yay. Good. All right. 15% is the breakouts from the neckline, if you understand what that is. 15%, 86.66. Then 30% second target. We hit both targets. And then the $10,000 resistance. Also, this trend line right here. So as soon as this breaks, that's bad. Trend line here as well. Once both of these trend lines break, that's bad. And then unfortunately, this is the start of the pandemic right here. Right? So it was forecastable. If somebody was thinking, oh, you know, how do we know Bitcoin is going to crash in 2020? And when it's happening, there's signs on the daily chart. It's very sensitive, though. You have to be very sensitive. Very sensitive. This is why every time I come on stream, why am I always doing support, resistance, trend line, support bounce, failed right here. And we hit the target. We hit the resistance right here at $10,000. Then it starts downtrending. So if it starts downtrending, what would have saved a lot of people is, let's say I'm doing my bar replayer practice, right? And then I see this setup here. Ooh, upside down head and shoulders. Long this guy. Stop loss 10%, 20% to 30% target. Let's pretend I was going to do the 15% sell here and sell here. If it's disciplined like that, then somebody's not going to be in trouble. If it's disciplined like this, green box, meaning entry, profit target 1, profit target 2, stop loss. And then once it hit this number 1 and number 2, that swing trade should have been sold already. The problem is, if nobody has trade management and then you do random, not you, but if somebody does random buying, close their eyes, then the fear pandemic starts, it moves too fast for some investors. Day traders is this is the bread and butter of day trading, right? You could tell if you're a day trader, you know what I'm talking about. You have to make the decision. You see it, make the decision. You see the pattern, you got to make a decision based on your knowledge, experience, and strategy, right? Day trading happens a lot faster than this. If you do 1 minute, 2 minute trading, and you could practice on your own during market hours, you'll know. You got to move fast, make a decision, and hopefully, and not just hope for it to be right. You know, your skills determines if it's going to be correct or not. But it's just practice. Just practice. Also, how do I know we're going mega crash? After this, it's staring at me right in the face. I don't know if anybody sees it, but head and shoulders, that's bad. Neckline breakout, that's bad. We just lost that. So what's the measured move here? This is the beginning of the pandemic. Negative 25 to negative 50% down. So I measured that down here, negative 25%, negative 50%, all the way down here at 4189. And then pretend if this is I don't know what's going on. Let's just pretend. Like, I don't know there's going to be a virus pandemic that's going to spread, right? I just, in America, though, I should point out that in America, back here in January 1 month, 2020, we had the first case of COVID positive in Seattle, Washington, I believe, in Washington. I saw that on the news, and then I knew, wait a second, this could be bad. This could be bad. So going into this rally, I knew, like, wait a second, we have this like weird virus thing that came onto the Washington state. It's spreading. What is that? Right? That was the beginning of it, in the middle of January 2020. And then in terms of, remember the history, we had this when we got locked down in USA was March 2020. Okay? So this is why it's about to crash, if you're wondering history on the price charts. But in terms of the setup on the price, if I didn't know that at the time, you know, all this information I just said, we got multiple trendline break, support break to the downside. We got this downtrend price thing going down. We have a head and shoulders. That's not good. I did measure double the target. So I'm going to short one and let us go. It's kind of hard to see. Okay, super oversold. We would have hit the target in 2 days or 3 days from there. Okay, so you see how that works? And you see how, right, even if I didn't know what was going on in the world, you see some weird setup like that. If you're very attuned to the charts, it was preventable in terms of major loss. Unfortunately, this is probably a very hot subject with some people, but, you know, we learn from the past on the charts and apply it to the future. So then right here, it literally hit that target. You can see the candle body wick literally went down there. So if this was like a crypto exchange and you had your second target here, just sell some or sell all and you're out. So if this was me, if I was disciplined, I would close. Close enough, I would close. Okay, and then let's keep going here. So now that that first target's been hit, there might be that oversold bounce. Okay, and now what are we doing? Wait a second, it's going up. Now, let's see a new trend develop. Now we have this resistance on the top here. Now I'm thinking, all right, we have that breakout. Okay, if this is real, I want to see it recover. Because sometimes if it's fake, you get low, high, just like right now. And then if it crashes one more time, that's fake. But if it low, high, and it holds, that might be real. And then it never comes back down. It's like, wait a second, that's good. But what people don't realize on the chart as well is we also had March 2020 was the low where USA government stimulus happened. The government and the Federal Reserve of USA saved the economy by saying we're going to inject trillions of dollars into the economy. People are going to get stimulus check. That's why it stopped. If the government and Federal Reserve did not do that, we would have had uncontrollable crash. Uncontrollable. But they did it as an emergency to stop. So this is why sometimes the news is very important when the news is real. All right. So that's just one thing we don't see that on the chart, but that's actually what happened in real history. So then, if this thing is going to bounce up, I'm just going to observe it a little more. Some really aggressive longs, they would have actually bought this right here because it's very super oversold on this daily. On the 4 hour as well, there's a reversal setup right here. triple bottom. So on the H4, there's that upside down head and shoulders. I remember this vividly. Crashed, upside down head and shoulders again. Now we have a neckline breakout and see it again. It's happening again. Upside down head and shoulders. Measure this guy 25%. We hit the first target. Boom. Somebody sold. Next target 50% up. 82.43. See if it's gonna break this $6,800 price level. Let us go. Long that. Let us go. Wait. Let me put the problem is that's kind of not a great spot to buy at the top here, but some people might actually buy it there. So let me just do it as an example. The stop loss needs to be much bigger, 15% to almost like a 30%. See if we're going to get stopped out on this one. This one's more random trade. That's not my strat. See the pullback. Pullback, it's hesitating. But then we survive. Yeah, we hit that little triple top. I still remember this actually, 1600, very hesitant. And then we finally get the breakout. Little bit of hesitation, pullback. Oh, that's not good. People don't want that. Deep pullback. That's not good. We lost it. I remember thinking like, oh no, is crypto going to crash back down to $4,000 at this point? It's in my stop loss, but I'm committed to it. Small amount of capital. In this education example, see, but we hit that support level. So here's a good example of the random trade, right? This is where, when I open this one, this is at resistance. This blue line. Where's the support? Down here. So if I just waited a little bit, how much time is that? It's only 3 days. Only waiting 3 days to see, are we going to go up or are we going to go down? So sometimes waiting is the key, right? In terms of, is he going to do this or is he going to do that? So it went down. So, you know, I got lucky on this particular random trade. Not lucky, but it bounced into support. We did not get stopped out. So trade is still on. Let us go. There was this ominous head and shoulders here. You can see it, right? It's like, is it going to be repeat number 2? There's a shooting star there, a little bit of inside bars, hesitation going sideways. Let's just fast forward. If I'm going to get stopped down this one, just stop it out. But then no, stimulus checks. Oh, where is this thing going up? Okay, wait a second. It's not going down anymore. Are we going to have a breakout above $7,000? Is this thing going to go up above $7,000? What's going on here? Uptrend reversal. We broke out of it. My goodness. My goodness. Saved by stimulus checks. The government affecting the price. These were wild times. 2020. So we're in a 4-hour right now. Let me switch to a daily so it makes more sense. If we can see, we hit the higher low, right? I actually bought at a higher high, but we did not get stopped out on this one. But it is support level. So let's pretend if I did get stopped out, I would just bought again right here at 6,000 or that area. But it's still going, ongoing. So now we're starting to see this high, low, and then you can see we broke out, and then bam, broke out to 10, almost 10 right here. See, so that was a very black swan event. They'll take some of that profit or hold or whatever you want to do there. But this is a very black swan event. It's not that it just crashed and then rebounded back to zero or where we started. There's a lot of government and business change and regulation and stimulus checks right here. But why is it important to look at this? We learn a lot from technical analysis. You learn a lot. And the problem is what's not on the charts is living through this emotionally. If you're watching this, you probably lived through it, whether you were looking at the charts or not. We all lived through this. We're all alive right now for past 3 years. So we literally visually lived through this. But what is not on the chart is how did it feel when this happened? There was intense fear. There's intense emotions. I remember waking up on this day, March 12th, 2020, and being like, wow, we had the ultimate short sell-off that was perpetuated by like an exchange algorithm or something like that, right? Use the exchange algorithm. But still, I remember like, whoa, yesterday the price was 8,000 and today we're at 4,700. That was a huge short. And that never feels good, right? Unless you made massive profit on that. But if you're just looking at price and it's like, what is going on, right? 8,000 to 4,000, huge volatility in crypto. And then also here, the uncertainty is like, nobody really knows. Are we going to, 1 year from now is it going up, going down? It's just, we're looking at the price. Okay, if we're oversold and it keeps going up, I'm long. There is this one trend line, a real trend developed after one of the worst crashes in stock market USA history in recent, like for past 20 years. So it's important to practice. And that's why for me, after doing a lot of this practice and study and refining my strategies, is I don't really buy stuff when it's like unclear, right? I did a couple random examples right now. For the most part, I wait for my setup, or I wait for something to actually show up. Somebody could have longed here, or here, or accidentally here. Unfortunately, that happens. So without stop loss protection as a trader, it's gambling. It's risking it all. That's never good. That's not a sustainable strategy. So hopefully this makes sense to you and encourages you to check out this bar replay tool. I'll briefly just show the other tool, which I love and is usually used during market hours, is the paper trading. I'm not going to do it right now, but if you just open the bottom of your console here, it's paper trading, and then you have to turn it on. You saw that you connect it, and then you click. Your decision if you want to reset, but if you're really going to practice, just go and reset it. $100,000 fake money. Commission settings, set it up for your exchange, whatever the commissions are for round trip trading. And settings, in the beginning, you might just want to turn everything on, almost everything on. And then this particular paper trading uses the order panel on the right side. And then you have your entry, your take profit, and your stop loss, just like we were doing earlier. And you have to practice during open market hours for the most part. If you're really itching to practice, you could practice on crypto, USD, like 24/7, but certain random quiet times of the day, it might not move that much. So, let's pretend. Actually, I shouldn't do it here on this moment in time. If we use the past example for education. Right? You have your entry, your stop loss, your profit target 1, profit target 2, or even more, right? Profit target 3, profit target 4 up here. As high as you want to go, but as long as it's within that limit. All right, everyone. So hopefully I talked a lot right now. I gave a lot of education and knowledge. For some people, it's too much. For some people, it's a refresher course. But I am a swing trader and investor as well. So I don't really show a lot of day trading on this stream because the market's closed right now. So hopefully you learned something. And thank you so much for following and watching on TradingView. I'm live streaming here, TradingView, YouTube, Twitch, and Discord. If you'd like to learn, please give me a follow. Let your friends know, share it on social media about this channel. And I'm trying to build a community of competent and good analysts and traders who have, at least foundational education that we're not, like people are not just totally lost in the market, regardless of what happens in the world. So thanks so much. Hope you have a good week, and I will see you. Let's see what day actually. So my March schedule is actually a little bit different. So this particular week, I might not be able to stream on the 5th on Sunday, so I might stream on the 6th Monday. We'll see, 6th or 7th. It really depends. So hopefully as early as possible for next week for the next stream. So thanks so much, and I'll see you next time. Bye-bye.